Can we just start with like what in an environment where interest rates go up, right? Increasing, raising interest rates, what generally happens to property prices?
That is it's a very good question, right? What generally happens to property prices? Because most people think that interest rates affect property prices. And whilst there is some evidence to support that, it is not very strong and there is not a lot of it. Right. And I've got I collected a bunch of stats here to support that argument. Right. So over the last 30 years, interest rate rises haven't actually resulted in the fall in median house price. So I'm going to go through a few of these because I think they're really interesting.
Sure.
So rates rose from 14% to 17% in 1988 to 89. And at the same time, the median house price rose by more than 35%. Right? So interest rates went from 14% to 17% and house prices rose by 35%. Crazy. Then there was a fall in interest rates from 17% to less than 9% between 1990 and 1993. And then that also had barely any change to the median house price. Right, or pretty much like no change. There was no noticeable differentiation. Okay, hang on a second. So interest rates have gone up, prices go up, interest rates go down, and nothing really happens. Interesting. So then interest rates went up again in 1994 by about 2% in a year, and then the house price continued to just generally rise, not in a crazy way, but in general, like 6% a year type way, right? Then there was an increase in interest rates from 6% to 8% in 2000, and it basically didn't have any impact on the property market at all. Like the property prices continued to rise, nothing really changed. There was not even any blip in the median house price Bollinger Band. So there was rate increases again between 2003 and 2008. Which basically did nothing. House prices drifted a little bit sideways and then continued up. And then the GFC hit. And then the GFC hit and the RBA made cash rate cuts throughout 2009, dropping interest rates by about 3.5% in 9 months. Now, at the start of the GFC, the median house price fell a little bit, but that was largely because of fear and the psychology of the market. I would suggest rather not the fact that interest rates went down. I don't think interest rates going down caused the housing market to go down. I think it was the fact that the whole world was in turmoil and everyone was just scared.
Yep.
And then the median house price went up again. And then the interest rates went back up to nearly 8% by 2011. So 2011, they were nearly 8% interest rates. And then the house price just continued to go up and then continued to accelerate and continue to accelerate, right? And so this trend shows that as at best historical facts, is that sometimes when interest rates fall, the median house price rises. Sometimes, not always, but sometimes. There's some merit to that, but there's less to suggest that the interest rates. A rise in interest rates will necessitate a fall in prices. In fact, the evidence just does not show that. And what I find most interesting about that analysis is the lack of correlation. Like it's the complete lack of correlation. You can draw 2 light points in the sand and say, hey, what happens to house prices and what happens? But they're not actually linked because there's no consistent pattern, which I find truly, truly intriguing. What do you think?
Yeah, because you would think in a general sense, that, supply and demand. So when prices go up, referencing again the last episode we did when we were talking about the paradox of thrift, where when prices go up, more and more people want to get in because it's the cheapest that, from their perspective, the price that it is today is the cheapest that it's going to be for the foreseeable future. So there is more demand to buy something today. Yeah. So that pushes prices up, right? Because there is more demand than supply at that point in time. And so that's kind of what happens when interest rates are low. So like now in the scheme of modern Australian history, interest rates are relatively low.
Extremely low, record lows, never ever been lower.
Yeah, and so there is I would assume, a correlation with the demand for getting mortgages basically at the moment because interest rates are so low because the cost of money is so low. So you would imagine that the inverse would be true, where if money is suddenly more expensive and the rate goes up, then there would be a decrease in demand, and so prices may not like drop, but you would imagine they would at least stagnate or slow down a little.